Welcome, everyone. We are witnessing a technological revolution and disruption in capital markets, financial services, and the banking industry. The scale and pace of change in financial transactions and emerging technologies often lead to new business models, such as embedded finance. In addition, the convergence of cloud, artificial intelligence, and data are strong foundations to reshape the future of the financial world. My name is Somesh Chablani, and I'm honored to moderate this exciting panel discussion focusing on technology trends and innovation in capital markets, financial services, and banking. Today, we have with us a remarkable set of panelists and senior leaders representing FIS across both the capital markets solution business as well as the banking solution business. Over the next 30 minutes, I'll be asking the panelists a few questions in order for them to share their views and perspectives, as well as provide you key and valuable insights based off our latest FIS Global Innovation Report. With this, I am privileged to introduce our esteemed panelists. From the FIS Capital Market Solutions business, I'm pleased to introduce Tony Warren, Global Head of Enterprise Strategy, followed by Jason Baldassare, Head of Solution Strategy, and accompanied by John Pizzi, Head of Innovation and Strategic Partnerships. And from the Banking Solutions business, we have Peter Boyer, Global Head of Enterprise Strategy, and Annie DiStefano, who is also Head of Partnerships and Ecosystem Banking. To kick off this discussion, let's start the question with Tony. In today's global economic environment, business leaders say their organizations are exposed to more risk, such as cybercrime, increasing regulations, and unstable financial markets. Also, according to our Global Innovation Report, 49% of executives surveyed state they face and have to manage more risk than ever before. So, Tony, for the capital markets and financial services sector, regulatory risk is one of the most top concerns. What are you hearing from the capital markets clients? And how is FIS Capital Markets innovating and bringing solutions to address regulatory requirement and client needs?
Thank you, Somesh. Look, regulation is obviously a very wide and diverse subject, and it is always there. Regulations are always changing within the capital markets business and really across financial services in general. But one thing's for sure, it has peaks and troughs, and I would say that the rate of regulatory change is certainly accelerating again. And it's especially in risk management. A lot of this is perhaps given the recent events in the US banking market that we saw earlier this year, but the overall spend that we see is dedicated to compliance, and it's really significant in every corner of all of the businesses. So optimizing that investment remains a critical question from the boardroom down and across the organizations. So as you pointed out, Somesh, but based on that 2023 Global Innovation Report that we've just released, around about half, about 49% of executives say they're facing more risk challenges now than ever before in the past. And although many organizations face increased risk, almost all, like about 93, 95%, are confident that they'll be able to manage and overcome their challenges, largely due, I think, to advances in technology support. So capital markets clients often express concerns about navigating these complex regulatory environments and changes in the regulations. So we see particularly things like Dodd-Frank, Basel directives, which can actually have quite a significant impact on their operations, where they have to create compliance adjustments, and this can actually impact profitability. So again, technology is the key. So as a solution provider of technology, I'm very pleased to see that this is right at the top of our agenda and the priorities that we look at when we're making decisions of where to invest across our services. So we continue to innovate and offer solutions such as the treasury, around the treasury businesses, so both enterprise and as a SaaS for the mid-tier market, but also very specific risk tools that help for credit risk, interest rate risk, market risk, and of course insurance risk. So these are all financial management and risk assessment solutions, and they offer comprehensive risk and regulatory compliance monitoring that helps support new regulatory requirements. And we're certainly seeing a demand for more SaaS-based products, sort of easier to plug in, and certainly products that are agile, so we can react and respond very quickly when we get changes to the demands of the regulations.
Thank you, Tony, for your valuable insights and diving deeper into the type of risk and the solutions which address those risks. I have another follow-up question. Taking the recent banking failures and crisis, the FIS balance sheet manager is one such solution which could have acted as an early warning system or framework to a bank such as SVB, for example. So could you elaborate further and share your perspective on this?
Everyone was talking about it and it scared the market for sure. So when we had Silicon Valley Bank's failure back in March of this year, this was the third largest bank failure in US history. So it was obviously taken extremely seriously, and it sent certain shockwaves. Although I think the market overall recovered quite nicely and kept it contained. But a bit behind it, I mean, they attempted to raise about 2.25 billion of capital to cover a 1.8 billion hole they had in their balance sheet, and that was set off by the scale of 21 billion of bonds at a loss. So when the bank's investment greatly then decreased in value, its depositors then withdrew large amounts from their accounts, causing the California Department of Financial Protection and Innovation to seize SVB and place it under the receivership of the FDIC. So the Silicon incident was the largest bank failure since those dark days of 2007, 2008 and the financial crisis. So again, looking at how we can help support the industry, we already have a tool which we're now actually upgrading and again making it SaaS deployable. It's called the FIS Balance Sheet Manager. And like its name, this is a solution for managing balance sheets and analyzing financial data. So it could have potentially served as an early warning system for Silicon Valley during the banking crisis by providing comprehensive analysis, but importantly stress testing, regulatory compliance, and then real-time monetary with insights into the portfolio diversification. So in more context, there's four different elements. We have the risk exposure, so it looks at the analysis and it provides modeling tools that can help identify those potential risks within the balance sheet and detect vulnerabilities within specific asset classes and liquidity concerns. So that would give the bank an opportunity to preemptively address the issues before it's too late. It also, and in line with the regulations, we have stress testing and scenario analysis. So again, the bank could have simulated various economic conditions, such as the peak of inflation and interest rates going up very, very quickly, which could have helped assess the resilience of their balance sheet by forward stress testing. And then there's a series of real-time monitoring and alerts, which would give the ability to track changes in key metrics, alerts regarding any deviation from those predefined thresholds. And then finally, it's going back to that asset class and portfolio diversification. So to give insights, the bank could have utilized this to feature to ensure that they had a balanced and diversified asset allocation strategy. And potentially that can reduce the impact of losses in specific sectors or asset classes, which indeed is what we saw. So hopefully, we're well positioned to provide technology to be a little more preemptive, to be forward thinking, that if you do then get these sudden spikes or upsets in the macroeconomic cycles, the banks can be better prepared by using these tools.
Thank you, Tony. Loved your perspectives, not only from an industry perspective, but also talking about how important it is to make sure you manage balance sheet risk and do stress testing. I want to turn to Peter. Hi, Peter. Rising inflation and interest rates, bank regulations and macroeconomic factors all propel financial and strategic risk. With reference to our Global Innovation Report, more than 3 in 5, that is 63% of the survey respondents, representing organizations, including banks, are concerned about financial risk. And more than half, which is 54% of the respondents, are worried about strategic risks. What are you hearing from the banks on the approach to financial and strategic risk? And I'll appreciate if you emphasize the strategic risk aspect.
Yeah, thanks, Umesh. It's a great question. I think it's important to step back and really think about the breadth of risks that banks are managing right now. And ultimately, they're all very intertwined. So first, you have the rate environment. The Fed funds rate here in the States hasn't been this high since 2001. In some ways, that actually creates strategic opportunity. They create interest rate products that are really high to attract new customers and deposits. On the other side, that creates financial risk because it ultimately can compress their margins. There's also increased competition between banks. If you think about what Tony just talked about around stability of deposits and needing to have stable balance sheets, banks are competing for those deposits to find, to really create a long-term balance sheet that works for them. There's also fintechs competing for those same deposits and accounts. Consumers like you and I also are getting used to more seamless real-time experiences. That is now table stakes for a lot of banks to keep and grow their customer base. And then ultimately, there's these regulatory expectations that continue to evolve, but also puts pressure in the system. Now, each bank has their own strategy that is unique to them, but ultimately, a focus on deposits is something that most banks are focused on right now, which creates strategic opportunity, but also risks if they can't manage that. Now, those strategies are ultimately enabled by technology because consumers have become used to that real-time seamless experience. So when we think about where banks are investing in their strategy, the top two cited reasons from our investment report was both growing their banks, but also protecting their franchises. And I think that is a place where banks are putting a lot of energy right now.
Thank you so much, Peter, for your rich insights and experience on financial and strategic risk. I call strategic risk as the big S in the risk category, and it's definitely on the top of the agenda of all CEOs and C-level execs. I want to now pivot a question of innovation, which I call the big I, to Jason. Innovation can be used not only to mitigate risk, but also to gain a competitive advantage or edge. Could you share some of the key capital market solutions, and I know Tony alluded to some of them, which are enabling our clients to be at the forefront of innovation in order for them to grow and expand into new markets as well as mitigate risk?
Yeah, thanks, Umesh, and really happy to be here. So if we think about risk in this case, let's think about it from maybe two dimensions, right? Regulatory risk and operational risk. And you're right, Tony talked about asset and liability management and what happened here in the U.S. over the summer, and some of the solutions that exist within our capital markets business to support looking at that and hopefully helping address it as we go forward. And certainly there's going to be, no doubt, some increased regulation off the back of what happened this summer that's going to place more impact or more stress on these banks to really be able to manage that going forward. Europe is really leading the way in a lot of respects from a capital adequacy respect. Here and they've really been looking at capital adequacy and interest rate risk in the banking book. And so that same suite of solutions that Tony was talking about, we've actually been able to take those into the European market and really address similar regulatory risk within the banking environment. And as those regulatory risks and regulatory pressures expand, we'll be able to take those solutions and really grow those. And the way we've been able to do that is, by having modern underlying platforms that allow us to adapt to these regulations and bring this functionality to the market very quickly. Obviously, we stay very close to our clients and the market, which helps us do that. But the core to being able to really do that is having a strong underlying platform that supports making these changes as new regulations are introduced or changes to existing regulations are introduced. Another area kind of within that regulatory risk environment is in the insurance space and actuarial risk modeling. So you think about IFRS 17 was a big driver outside of the US, really specifically in Asia several years ago. And that allowed us to take our actuarial risk modeling platform and really advance it to support that market. And then in the US, you have LDTI, which was off the back of IFRS 17, very similar. Again, taking a similar regulation, using our existing platform, adapting it, and then being able to cover multiple geographies where these regulations are similar but different, as we all know. Again, I think the underlying technology was a big push to allow us to be able to do that. We've moved that platform, that actuarial risk modeling platform, to SaaS. And what that's really been able to do is not just speed up the calculations of these big risk models that run underneath it, but it's also allowed us to move into new markets and allowed our clients to be able to do things that they haven't been able to do before. One last area that is related to regulatory risk is ESG. We're not going to dive into the whole landscape of ESG here. That's a whole separate conversation with the panel. But in the area specifically around climate risk, there's some impending regulations coming. We're going to talk about that later in this panel, so I'm not going to steal Tony's thunder. But we've been able to take that same actuarial risk modeling platform, leverage the complex risk engine that does those models, and build a climate risk modeling solution, which is really exciting. So that all touches on kind of the regulatory risk and some of the solutions that we've got within capital markets that are really helping our clients address those regulatory risks. Now let's see about operational risk, right? This is sometimes doesn't get all the headlines that the regulatory risks does, but in some respects it's just as important, if not more important. Our clients can afford to make mistakes, whether it be in the banking business or in the capital markets business. We're running these middle and back office solutions that our clients are relying on and their customers to run their business for them. And so a lot of automation and exception management and integration within the middle and back office has really helped us focus on reducing operational risk. So when you think about something like our private capital suite in the private equity space and integrating that with our treasury solution, these processes historically are been very manual. There's been a lot of I would say suboptimal data handoffs, limited exception management capabilities, not strong integration. So we've been able to bring those together, which has really helped improve the life of the CFO and the office of the CFO, and really decrease a lot of operational risk that we saw within the private equity space. Another solution that really cuts across, we've got panelists here from our banking and capital markets business, is our data integrity manager. This is all about exception management, reconciliation. The more time that we can have our highly skilled people in the middle and back office actually looking at data and making decisions, and not spending so much time ticking and tying and actually finding exceptions, the more operational risk we can reduce. And this has been a real focus of us to be able to bring these solutions to the market and help reduce operational risk for our clients. So I hope that gives some perspective of kind of two sides of the risk coin here, from a regulatory perspective and an operational risk. But we have lots of solutions that are focused on both areas, and are really excited about what we're bringing to the market.
Very, very exciting and interesting, Jason. And I appreciate your broad perspective. You touched about regulations, right, from ICAP, IFRS 17, ESG, and also talked about the solutions which address some of these regulatory needs and operational risk. I'm enjoying listening to these expert panelists. Let's move forward with a question to Annie. You had partnerships and ecosystem banking. I love the banking ecosystem concept. And to me, ecosystem is all about co-creation with strong connection of quality products and services, including client experiences. Based off your industry and FIS experience, how can early adopters of technology protect the businesses from risk? And following up to Jason's response, Could you also share the FIS Banking Solutions approach in building the banking ecosystem with partners and the innovation happening around embedded finance and open APIs?
I won't reiterate all the risks that we talked about, but just full stop, the backdrop of the threat landscape has increased and it's increasing rapidly. There's a lot of different risks that you need to solve across the value chain. And FIS plays a very critical and interesting position within that value chain of banks and fintechs that we work with. I would say on the actual risk aspect and in adopting new technologies, I think risk needs to be just a cornerstone of your product and business planning. Tony mentioned and Peter did as well, just the investment into compliance and risk tools at the board level, having put, absolute dollars into investing in those capabilities is absolutely part of the business planning process. But then from a product strategy standpoint as well, of how do you mitigate risks, across your experience, whether that's distributed in an ecosystem or you're building it yourself, and what tools or parties might you use to actually mitigate that risk. So I think it's very critical for, product managers and teams to actually think about this up front in your planning process when you're bringing in and weaving in new and emerging technologies to your client experience. On the ecosystem side, and very much what FIS is looking at, is how do we change the paradigm of traditionally maybe partnerships were done in a way where, the client is served by one party and there might be a number of parties in the background and partners that aren't actually owning that client relationship. Instead, it's really now building an ecosystem of partners alongside us at the table with our banking clients, as well as with fintech companies, of actually building out that ecosystem together and how we put the client in the middle and have that client centricity approach with everything we're solving for via a partnership model and then the distribution of that end product. So you really think about how we can have multiple fintech companies that are working together. We're in the middle of that value chain and working with multiple fintech companies. And then also how we bring our banking clients and potentially their end clients into the problem solving and product strategy planning process. So across that whole ecosystem, we've talked about all sorts of risks that we need to solve for. And that certainly is the case, whether you're doing that via a build first or a partnership model. And I think FIS is definitely taking a, kind of putting our foot forward approach and being a leader in that space across the broader fintech ecosystem.
Thank you, Annie, for sharing your rich experiences. Really love all the initiatives you and Peter are driving to co-create this banking ecosystem. And you're absolutely right. Risk and risk mitigation are very coupled with planning, and they are the cornerstone of any business. This leads me to a question to your peer, John Pizzi, who heads partnership and innovation within the capital markets business at FIS. Hi, John. How do you see the industry scale with transformation and AI? As per our latest global innovation report, it's truly global, as Tony and Jason alluded to. So many of our solutions address all the different markets, US, Europe, and Asia Pacific. 56% of the firms or respondents agree that there are far more opportunities than risks to both cloud computing and new digital technologies. So John, how is FIS capital markets responding to help our clients take advantage of these opportunities by leveraging cloud, AI, and data?
Sure, Samesh, thanks. Look, I get the opportunity to spend a lot of time with our partners at Amazon and Google, Microsoft, Snowflake, and others, and talking about our efforts around cloud transformation, artificial intelligence, the evolution of both the digital operating experience and the customer experience. And the one thing that's abundantly clear in all our discussions is that the pace of change now is faster than it's ever been before. And more importantly, it's not slowing down. When I read the Global Innovation Report, it was clear to me that our customers get this trend. The most telling statistic that I saw, nearly 87% of the firms surveyed reported they're going to spend as much or more on digital technology, AI, and cloud computing in this next period as they did previously. So they get it, right? They're going to put their money into those areas because they understand the importance of them. And we also get that at FIS, and we're helping our clients take advantage of these opportunities, no matter where they are in the transformation journey. And they are in different places. So for customers that are at the beginning of that journey, we're working aggressively to move them into the cloud so that they can be, more efficient and nimbler, and set up that foundation for innovation. Then we've got customers that are further along. They've already invested in that cloud foundation, and we're helping them, harness the power of their data, take advantage of advanced analytics, and then start to build new modern digital experiences, both, in their operations as well as, in their customer experiences. And then, of course, we've got customers that are advanced in their journey, and they're in a unique position, right? They get to take advantage of the power of AI and generative AI and start to look at, more transformational opportunities, risk management, business operations, and broader innovation, right? So I think, we see ourselves sort of helping that journey across all these customers. I know later in this conversation I get the chance to talk about AI, so I'll save some of that conversation for then. But I think this cloud foundation is incredibly important and is a big focus for these customers and for us.
Thank you, John, for emphasizing on specifically the cloud foundation, and love your perspective on the different customer journey, and drivers can be efficiency, innovation, and cost. Another follow-up question, John, as data is the new currency, and it sort of couples very well with cloud technology. When I and we reflect back 5 years ago, cloud adoption was all about cost. The new CIO mantra is not just about the old adage, which is do more with less, but it's all about scale more with less. So, John, what is your advice to financial entities and firms looking to still make a decision on cloud adoption and leverage the modern and secure technology, aka become cloud enabled and scale?
Yeah, so I think, look, in a world where we're talking, immensely about things like generative AI and innovation, when you really look to the cloud partners and where they're spending their money, their focus is still around the economics of the cloud, right? And making sure that, the public cloud experience, the cloud experience, is driving a very efficient situation for its customers. So my advice is simple but hard hitting. Let's get to work, right? The financial services industry, as it relates to tech adoption, is both an innovator and a laggard. But in the area of the cloud, this is a space that needs immediate attention. If you're not operating your business in the cloud, you're not going to fall behind. You are behind, right? So you need to get to work. And as I said earlier, most of our customers are further along in this journey, and the respondents, as I said, they've emphasized this for a little while. You're seeing that spending increase, so they're on this journey with us. But for those that are lagging, we're in a strong position to help them catch up, right? This is an insurmountable situation, but it's really important, and the advice is strong: is move into the cloud, get access to your data, so that you can innovate, right? I think that's the pattern that's most important.
Again, thank you, John. Loved your simple and impactful statement, right? If you're behind and not adopting to the cloud, then you will not scale, and we are here to help. Thank you to all our panelists to provide us great insights and perspectives on technology trends and innovation in capital markets, financial services, and banking industry. It is very evident that change and disruption is inevitable, which in turn transforms the business in creating new solutions and business models. Thank you to our audience for tuning in and listening to today's discussion. As a gentle reminder, you can download the latest FIS Global Innovation Report from our website, fisglobal.com. This concludes today's panel discussion, and we hope to see you again for another insightful panel discussion. Thank you.